that we had a couple of days of more than normal volatility. And so, it's been so slow, the E-mini, for the last, I can count how many months. And so when you see this 3 points, 4 points, it's interesting that, a lot of traders contact me and say, hey, I've never seen it this wild, I could say. But it's really not that. The normal E-mini S&P movement is 2.5 or between 2 and 3 points is normal. So when you think about what the market can do for you, look at it as far as anything above 3 points on the ATR or below 2 points in the ATR. Think of that as a guide. The way that I like to look at the E-mini S&P and currencies is I have a threshold. If the market does not trade above 1 point on the ATR, it means it's just hovering on 1, below 1. Really what's that telling me is that the last X number of bars are unable to trade more than 4 ticks. So what do we have during that kind of move? We have whipsaws, back and forth, flip-flops. It's not worth trading when the E-mini is hovering on 1 point on the average true range, which really we're denoting the high and low of the bar or the candle and saying what's the range of the bar. And so I'm using price and price action to dictate each of my steps when I go forward. And those of you who are in the mentorship program, I see here a few of you that are in classes here with me know this already. I'm just commenting on the new people here in the room that should also be aware of when they should and when they should not be trading. Now for currencies, I like to set my threshold at 5 ticks. And so move your decimal place over 4 places when you look at a currency, and the ATR is either above 5 or below 5, which would be 0.0005, 4 places to the right, and you should not be trading when it's that slow. It just does not make sense. It's just chop, right, Finley? Just chop. And so let's talk about when it's too volatile. When it's too volatile or chaotic, it's also not worth trading. The reason why I say that is because we have a stop set. And usually I like to set my stops a little bit liberal. I use 3 different type of stops on each trade because I want to be dynamic with the market. Right? They're time-based stop, a prove-it stop, and a catastrophic stop. And so when the market is volatile and I have a catastrophic stop, meaning I'm not willing to risk more than, let's say, 5 points on each trade, that's catastrophic. And if the ATR, the average true range, is 5 or 4, you can see that it doesn't take much to hit the catastrophic stop. So I want you to have a threshold when the market is slow, but also I want you to remember that when the market is volatile, we have problems as well. You may be able to see all of the opportunities that may exist, but it's not just opportunities to make money in the market. It's also opportunities to lose money in the market. So anything above 4, 5, 6, at that point you're going to say to yourself, it's chaotic. There's a lot of people with tight stops just losing back and forth. It's best to stay out for an hour or 2 until things calm down. And if they don't come down, for example, Finley says here the ATR was reading 6 on Monday. At one point it was, right. So even though you may say to yourself, no, I can possibly take 6 points out of this trade, also think about it's possible that you can lose 5 if it just shoots down and just tags you out as well. So that is not a situation that I want to trade in. All right. So I like to keep these webinars educational. Obviously, I want you to take a look at the Atlas line and the power price action. I want to teach you something as well. I like to do questions and answers. I haven't done a webinar. I think last month I did one with PFG, but I'd like to show you a little bit about that webinar. And so just for me to know here, how many of you here in the room currently have traded some type of price or price action, or are most of you here in the room, besides the guys that I recognize, are indicators only kind of guys? I just want to get a sense of how many traders are just following indicators and how many traders are trading price. All right, Joe K is price action. All right, very good. All right, good. Both. Jim is both. Okay. Excellent, guys. And so we have a good mixture here. Trying. Some of you are not traders yet. Harold's indicators only, mostly. All right. All right. So let's take a look at. If you haven't watched the videos that I did, one early this morning, and I did a video yesterday, let's take a look at the Atlas line as far as what it does, what it did, and what it can do. We're looking at here as soon as the day opens, and obviously we're looking at history, so I like to look at it as if we don't know what's happening here. Okay, as soon as the day began, you see this order here for 1249 quarter. Now, this order is displayed on your chart. Those of you who know about the Atlas line have this plotted on your charts for 1249 quarter. And so unless there's a reason not to go long, this is a long trade. Now I don't know the future, but I do know that if I look at my ATR, I know that I'm able to get about 2.5, 2 3/4 points out of this trade. Now if you're not comfortable, if you're not sure of what I'm talking about, just remember that those of you who are interested in getting the Atlas line, I do have a one-on-one webinar where I explain to you about how I use the ATR and about the stops and with currencies and things like that, and it's recorded. So everything I do is recorded with you. So there is a training session included with the Atlas line. This double bar long at 1249 quarter occurred because it's the second closing above the Atlas line. Really, it's simple as I can make it. And so I want to make sure that I can get 2.5, 2 3/4 points out of this trade. And so now you can see that entering at the close of this candle, market went up considerably, 4 or 5 points. So even though I'm only looking for 2.5, 2 3/4, this was made. Now, if the day continues to be long, then I have more trades to take. The bias is always long, either Atlas line pullbacks, Atlas line momentum trades, just taking long trades based on the Atlas line. Now, if price crosses below the Atlas line, I want to be out of the market, and if I'm still in a trade, and I want to take a short trade. And so let's see what happens here. This is today, August 3rd on the E-mini, and now we have 2 consecutive candles that are closing below the Atlas line. Now I like to use a 5-minute chart when the market is a little bit more volatile. Maybe you can go a little bit smaller, maybe a 3-minute. We want to get as close to the Atlas line as possible as far as an entry. I think a 5-minute is a good middle point. Not too long of a time frame for day traders and not too short. And so I want to go short 1242. So everyone who has the Atlas line that is here in the room has the same exact orders as I do. It's exactly the same. And so 1242 is my short. Unless I have a reason not to take this short, I'm short. Plain and simple, 1242. Okay? Jim, the Atlas line is not part of the power price action method. The power price action method is a 4 DVD program which comes with 8 weeks of training. So I send you DVDs and a training manual, and then you can attend the training. The Atlas line is software. Okay. Finley, does the distance between the Atlas line and price, is it a consideration when entering into the Atlas line trades? Absolutely. If you enter into the market so far away, Finley, from where you enter and from where the Atlas line is, remember we have a stop if it closes on the opposite side. That's one of our stops. And so if it closes on the opposite side, let's say at 1247 or 1248, that means that this trade does not want to go short. So I want you to consider the closer we enter, the better it is. So if both of these candles, we have candle number 1 here and candle number 2 here. If both of these candles, let's say, were 4 points, and you'd be all the way down here entering short, or 4 or 5 or 6 points, that would be a higher risk trade. That would be something that I would say do not take that. Absolutely. Okay? So you want to enter as close as you can, because if price just turns around on you, we want to be out based on it closing on the opposite side of the Atlas line. Joe says here, do you enter at market or at limit? I prefer limit orders. I really do. I don't like the slippage. I don't like as far as you know, just going in and wanting 1242 and instead getting 1240. I want to try to get 1242. Now that being said, if you jump in at market and you get in within a tick, that's completely acceptable, especially with an ATR of, we're looking at this as a 4, right? So it means 4 points is achievable on this trade. So if you just jump in and you say, you know what, I'm jumping in, I'm losing a tick, but I'm only going to take 3.5 points, even though that ATR is telling you 4, then you can just minimize what you, or I should say, take it off on the back end, Joe. All right. So if you're going for 4, your profit target should then be 3.75. Okay. You're welcome, Joe. Jim, between the power price action and the Atlas line, they're completely different. This is software, and I show you how these trades are set up with the one-on-one webinar. They both can be traded on currencies or any market, really, except the market has to be 24 hours for the Atlas line to work. But on the power price action, it doesn't have to be 24 hours. We can use it on stocks, we can use it on longer time frames, and the training is included for 8 weeks. So it's a little bit different, completely different methods and strategies. Jim, it depends on what you're after. And so now, what I'm looking for is a profit target of 4 points, right? Even 3.5 points, I think, is a good conservative way. So here we go. You absolutely got it here. So at this point, by 10:30, we have a long trade, and it was a good trade. We have a short trade, it was a good trade. Now, besides this double bar long, double bar short, the Atlas line gives you more trades than just these two. There are bounce trades. There are trade crosses, which I actually don't even use because it's only used for volatile times or when there's a news event. Not only that, if a trend continues, I am looking for a pullback trade. And now, those of you who know this, I want you just to hold off for a second with your questions. The pullback trade is something that, you know, most traders talk about, and they say, you know, I got in on a pullback and that's a better entry. And that sounds great. But I want to add specific details on what is a pullback, how do I find it, and when do I enter a trade. And so I'm looking at this and I say to myself, what is a pullback? Now to me, when I see a pullback, all I need is 2 consecutive green candles because we're below the Atlas line. My bias is short to begin with because price is below the Atlas line. And so I look at this and I say, I want to go short the market on a pullback. But first I have to say, what is a pullback? 2 consecutive green candles is a pullback. So I see them right here. I see here 1, 2, 3, 4. So all of these are pullbacks. I mean, or I should say all these green candles, what I'm showing here, is price pulling back. The mistake that a lot of traders make is they see 1 bar, 2 bars, and they just jump in short. And you see the market just kept on going. Let's add a few filters. Let's add a few rules to this. If I'm going to go short this market, I need proof. As a price action trader, I need proof. Okay? And so what I like to look at here is this red candle right there showing me that now I'm going short. And so this candle right here, after we have this pullback of green bars, I just need two, there's four. This red candle, as soon as it closes, I'm going short. At the close of this candle, I'm going short limit or market. I'm only going for a point or point and a half, just a quick trade in and out. And so 1241 quarter, 1238.50, it's more than enough room to make a quick trade there. Furthermore, there is a caveat. If you are going to take this, make sure that this entry is lower than your previous double bar short. If it's not lower, then you shouldn't take the trade, because now the trend has changed. The trend is going up. You do not want to enter higher than your previous entry. So every trade that you take, for example, here is another one. Okay, where is it here? 1, 2. 1, 2. And this is another pullback. Here is a red bar telling you it's time to go short. This is actually a bounce trade as well. This is a bounce off the Atlas line. But forget about that for a second. This is an Atlas line pullback. The reason why you would not take this trade is because this is higher than actually your last pullback. That's the reason why you would not take the trade. Price is now telling me that it's going up. It's not telling me that it's continuing further down. All right? So you would not take that trade. Exactly, Finley. This trade is not taken as a pullback because this is a higher entry than your previous Atlas line pullback trade. And so in order for us to make sure that and to recognize that price is continuing to go down and down and down, we always have to enter lower and lower and lower. All right? Anybody have any questions on that? Hey, Finley, is this entry lower or higher than this right there? That's not even, Finley. That is higher, right? So you would not take this trade. All right? The short needs lower low entries, okay? Okay, you got it. Okay, very good. Good job, Finley. All right. All right, hold on just a second, guys. All right, now, let's take a look at yesterday. So I showed you today here on the trades here. Let's take a look at what happened yesterday, because yesterday was a very, very interesting day. Take a look at this. As soon as the day opens, as soon as the Atlas line started to trade, what do we get? Double bar short and bounce trades. Here, here, okay? All right, so what does this mean? This means that we have here interestingly enough, double bar short right at the top of the move. Right at the top of the move here. What happened? Market went straight down. Okay. So this double bar short here, you look down, we see the ATR at about 2.5 points. That's what I want to achieve from the trade. Steve, I use a setting of 4 or 5 on the ATR, Steve Portnoy. Okay? 4 or 5. I don't use a defaulted 14. Okay? So if you remember what I referenced, what is a pullback? This to me is a pullback, right? Rules are rules, and there it is, right there. So here we have 1, 2. And the first red bar that reaffirms the trend down is here. So I want to ask everyone here that's in the room, would you agree with me that this is higher or lower than my initial entry there? What do you think, guys? lower, right? So that to me would mean that this is absolutely fine to take. Finally, the trades occur in sequence. So whatever trade is occurring at the time in sequence, that's the trade I take, whether it be at the open, whether it be a power price action move. And believe it or not, when you have different methods based on different things, whether it be a power price action and the Atlas line, if they're both telling you short at the same time, that would make it even more valid, because we're not using, as an example, two moving averages to tell you to go short. We're using completely different concepts to go short or to go long. So when you have two things coinciding, it's much better. Okay? Okay. And so now we see here an entry to go short, and there you have it. Now I have here another 2 consecutive candles pulling back. Okay? Absolutely, Finley. We're always going short at the close of the candle or just prior to it. You know, the two tools, if you remember, that I use are bar timer, which I don't even have here on the chart, but a bar timer, and the ATR. The bar timer, as you can see, this candle in the last 5 or 10 seconds, it would have been very easy to see that we are going short before this candle even closes. So you can see that it's going to confirm you're short, and then it went straight down. Okay. Now, 1, 2, this candle is red. Again, you can see I'm taking my 1 point. Minimum of a point is really what I want to get out of that. You don't have to wait to the last second. You use the bar timer. I mean, remember, if it's a doji and it's hovering green and then red, green then red, then I want you to wait to prove that it's a red bar. But in a situation like that, Finley, when we have two, 3 points maybe? Here we go. 76.50, 74, 2.5 points here, where the last 5-10 seconds, it's almost guaranteed it's going to be a red candle. Absolutely pull the trigger. All right. And so this entry here is lower than that one. It's a good trade. That means that this trend is still in effect. Okay. All right. Let's take a look at this here. This is August 1st. So now I'm showing you 3 days in a row. August 1st. We have 1, 2 closings below the Atlas line. We have this signal which pops up on our chart. I don't know what is the ATR here? 3 or something? 3. Yep. 3 points. You got it. Pullback. Does anybody see a pullback here? Here, I'll go bar by bar. Tell me what you think, guys. 2 consecutive green candles. Wouldn't that fit the ticket right there as far as the rules go? Absolutely. That's our entry right there. All right. There you have it. All right. I don't, Francisco. It's a good question. Do you recommend using 2 charts in different time frames? The answer is no. I prefer just the 5-minute chart. Now, I do have a scalping method that works on a tick chart for scalping. And so if I'm looking at scalp trades, then I have to have a tick chart. But I'm not looking at a 60-minute, a 15-minute, a 10-minute, a 5-minute, a 1-minute, all crowding up my display. I think that all you need is a 5-minute chart. Okay. Catastrophic stop is relative based on the ATR if it's slow, Joe. And if it happens to be on the opposite side of the Atlas line, then so be it. But a closing price is when it closes on the opposite side. So let's say that it hasn't hit your catastrophic stop, but yet it closes on the opposite side, then you have to be out of the trade. Okay? All right. All right, very good. So that was on August 1st. All right, so as an example, Joe, if you want to see,
even in July, right? What is this, July 30, July 29th here? Here is the orders for July 29th. Double bar short as soon as it started, which was this candle right here. As soon as it closes, Joe, on the opposite side, you're out of the trade. Then we get a double bar long. You're long right on this red bar. Okay? And away it went. Now remember what an Atlas line pullback is all about. Here's an Atlas line pullback right here. 1, 2, you're long right there. Okay? So not everybody uses the Atlas line and just follows these signals. They're using it with their own methods. They have their own way of trading, and they use the Atlas line as a guide. Go long and stay long, scalp long, as long as it's above the Atlas line, and vice versa when it's below. That alone will save you from taking trades that are unnecessary. Now, furthermore, let me just go to today. Not everybody trades the E-mini, and so this does work on currencies, just like the power price action method, as well as overnight. So let's take a look at adding a second Atlas line right there. Instead of me putting the market open to 9:30, let's put it to 3 o'clock in the morning. 3 o'clock in the morning is more or less where the life exchange picks up and starts moving the market for the European time frame. And therefore, here I have a second Atlas line on my chart. Here are the signals for the Atlas line overnight on the E-mini. Here's the long. Same rules, nothing changes. 1248 is my long. 1, 2 consecutive bars. That's my long right there. 1248. Put that out of the way there. Atlas line pullback. 1, 2 bars pulling back. 1 green bar. I'm long. There you have it. Any questions, guys? Yeah, on the E-mini, it's usually slow. So if you're looking at currencies, be happy to pull up a currency here. Jim, to answer your question, John, for a new trader who wants to trade, what method do you recommend? First, I'm not sure if you heard me, I said the power price action, because it comes with the 8 weeks of training, so you can actually come into the room week after week, ask questions, and learn that way. So as a beginner trader, Jim, I would recommend that you get the power price action, only because you have more interaction with me and get your questions answered. And then you can move on to other things, but the power price action for me would be the best bet. Rob, the euro, the Australian dollar, and the Swiss franc, definitely they are the markets that I like to trade as far as currencies go. 3 o'clock when the life exchange opens in London, that's what you want to go for. I would when as soon as it starts to open, you see it pick up. Okay, so the same rules apply for the euro. 3 a.m. Eastern Standard. So Rob, if you live in another part of the hemisphere, just adjust the 3 o'clock to where you live. Pullbacks, if they fit the rules, absolutely. Okay. All right, you got it, Rob. You're welcome. Ruben, the Atlas line is based solely on price. There is not any type of indicator, quote unquote, stochastic, MACD, channels, Fibonacci's, nothing. As a matter of fact, I know that there are a few mentorship guys here in the room that wanted to attend. You guys know that I don't teach and look at Fibonacci's, Bollinger Bands, Keltner channels, stochastics. None of that stuff works, guys. I only look at price. And so I like to look at this. When price crosses above the Atlas line, give me a reason to go long. Give me a reason to go short. Give me a reason to bounce off the Atlas line to the downside. It's a bounce trade right there. I want reasons. I don't want to hope that it's going to go in my favor. I want to absolutely know this market's going to go up or down and why. Okay? Joe, to look at where a news event will impact a currency, I believe that the best bet is to look at a Bloomberg financial report. it has there the information that moves the currencies. Okay, so Bloomberg Economic Report is what I recommend. All right, you're welcome. Francisco says the Alice line starts at the bottom of the bounce. I mean, give signals to trade or draw support line. Yeah, so for example, let me add here on the Atlas line the bounce trades to show you. So I'm going to turn on the bounce trades. So now they're going to be displayed. You see here where the market's bouncing off the Atlas line. These are displayed. They're right there. To go short, bounce. To go short, bounce. To go short, bounce. You see that, Francisco? There. And so, there you go. Price action mark. Price. It is an indicator, but it's based solely on price. There's nothing attached to it. Questions, guys? So, Ruben, to answer your question, I'm not sure if you heard me before. The Atlas line is based on price only. Okay. Now, what that means is that if you look in the back of the Atlas line here, do you see a parameter where I have set a number, like a moving average has a number 30 period, or 18 period, or 5 period, or 14, like the ATR? There's no period. This bar's back is just where you want the text to be seen. So for example, just put this out of the way here. For example, if you want the text, this is just for text, further away, you can have that, the text further away. If you want the font size larger, just configuration. But there's nothing that attaches a parameter to the Atlas line. So you're not looking at a 14 period anything, 28 period anything. It's just based on price and when the market opens. And so if you look at trading the euro, trading the E-mini, trading the crude oil, I have a lot of oil traders that are trading the oil market with the Atlas line. Let's take a look at the oil today. Here's the oil. Now, we have bounce and double bar longs here in the beginning of the day. Here's a bounce trade right there. As soon as it closed on the opposite side of the Atlas line, market just went straight down. Pullbacks are okay. The bias is short. All right. Yes, Harold, I don't like to overtrade. I do not like to overtrade. I like to take the morning trades, which I'm going to show you guys the ABC pattern in just a second, which explains to you the reason why I only trade the morning. There are definitely opportunities in the afternoon session, but there are reasons for all this, okay? So let me go to an E-mini chart here, and let me remove the Atlas line. 3 to 4 trades a day is really what I'm looking at. All right, Isidore, I'll talk to you later. You got it, Isidore. So I'm going to remove here the Atlas line, ATR, and okay. I'm going to remove everything here off the chart. Let me show you what the ABC pattern is all about. As a trader, we need to understand that the day means that there are certain traders and things that occur, and there's patterns. And so let's take a look at what this ABC pattern is all about. Any market, any time frame, you can do this. So it's not really just the E-mini, but it's really at any time. First, I want to take the 9:30. I'm going to refer to this as New York time, Eastern Standard Time. 9:30 to 12 o'clock. This is what I call A. And so in a lot of my videos I say I want to be done by noon, I want to trade the morning. Why is that? It is because the first part of the day, or the morning session, the morning part of the day, the A period, happens to be the one with the most volatility. There are the most amount of traders entering and exiting trades. Now, this does not continue as the day moves on. The reason why this occurs is not just because we as traders are trading, it's because of systems and of computer trading that are kicking in. A lot of systems are day session only, they're not overnight. So if there happens to be a gap or the system is telling you to go long or short, all these orders are starting to come in as soon as the market opens. And so when you couple all of the robot trading that occurs with everyone else that is positioning themselves for maybe a longer term move or a swing trade, the day begins and you have the most amount of action that occurs. And I actually can see that if I add the ATR back here. Right? I can actually see that at 9:30. You can see that it starts to gain in the movement of these candles, the range of these bars. So this is the A part of the day. Some traders, especially Heather, who's in Australia, it's late there, right? I mean, it's a completely different time zone where it's night for her and it's day for me. So I would recommend, Heather, that you stick to the A part of the day and be done by the first 2.5 hours of trading, which is really what the A part of the day is. It's the first 2.5 hours of trading. Enter the second part of the day. The second part of the day is called the B part of the day, which is right here. And the B part of the day is when quote-unquote lunchtime is. Now, I don't know about you guys, but Heather's not having lunch at 2 o'clock in the morning or 1 o'clock in the morning, right? Heather's going to bed. And so I don't believe that anything about people are having lunch or it's lunchtime, the reason why most traders think the market slows down. It slows down because all the orders have been already executed here in the beginning of the day, where robots kick in. There's stops that are being kicked in from overnight, from the day prior, day session trading. There's no reason why this should continue. Now it's just holding it, and so it dries up. And if you look at the ATR, see how it gets these bars get smaller and smaller and smaller. Okay. Now we have here the 12 o'clock session beginning, and it starts to whipsaw. Now, here is what I see constantly in every market all the time. I can guarantee you a move in A. I can. I know it exists every single day. That's why I want to trade it. B, I can't guarantee a move. What I can tell you is that 85% of the time, B will always be consolidated within the range of A. And so B is again 2.5 hours from 12 to 2:30. And so what do we have here? We have this same exact range being occurring in B as it did in A. This is what the market does every single day, except on trending days. And so if I'm looking at 12 o'clock and I have a big bowl of pasta in front of me and I'm about to start eating and I see this starting to close above closing price by 2 consecutive candles above or below this the range of A, right away I'm saying to myself, this day is going to be a trending day. I put down my fork and I start going long the market because it's doing something other than ranging in within the range of A. Okay? So as an example, I look for every single day B to be consolidated within the range of A. It happens every single day except when there's a trend. When there's a trend early on, 12:10, 12:15, it starts to break harder and harder outside of A. That's your indication to go long. I'm going to show you examples of this. Okay? I don't care about previous day's range, Jim. No, I don't. Alright. Take what you just learned here in A and say, let me see what happens in the last part of the day. Take the range of B and now this is considered C. C is the last part of the day. Late day rallies, late day sell-offs, all that kind of stuff that you hear. Have a reason to go long or short. 2 consecutive closings above or below the range of B gives you an entry long or short into the market. Let the price prove to you where it wants to go. So today, August 3rd, on the E-mini, price did not trend like it did yesterday and the day before yesterday. As soon as B came along, it whipsawed within the range of A, and furthermore, C didn't do anything either. It stayed within the confinements of B. That's right, Finley. Look for 2 consecutive closings above B or below B, or vice versa. Look for 2 consecutive closings above or in the C section, in the C part of the C section of the day, above or below. You want to see examples? Let me go back to a couple of days, and I'll show you this. Take a look at 9:30, 12 o'clock, 2:30. The day ends here at 16:15, right? It's a little bit late to trade it that way, but let's take a look at this. We have A, we have B, oops, and we have C. Alright guys, what do I expect in A? You guys know, a move. Something strong to happen, right? Some type of event to push this up or down. We do not typically see a range in A. We see it move one direction or another, and that's why I look at the open trade. I look at the power price action trades. I want this to occur in A. Even pre-market for the power price action gives you trades, but I'm looking for something that I can sink my teeth in and trade. B comes along, right? And I say to you as a trader, B's gonna just whipsaw within A. Typically, 85% of the time it's true, until it doesn't. We have a trend. This is a leading forecaster. It's telling me the day will end lower because B is starting to break out, especially if it happens early on. I like to see it at 12 o'clock or 12:30, between 12 and 12:30, it just pushing out of the confinements of A. And so we have 2 consecutive closings. It's telling me that day is going to end lower. Every trending day has a pattern. This is my pattern that I look for. Take a look at C now. If you want to take a trade in C, here's my range of B. Push this over into the future. Late day rally, late day sell-off. Here it is, guys. 2 consecutive closings. Maybe not even here. Let's say there. How's that? Finley, questions? Harley, the exact hour is 9:30. This is now Eastern Standard Time, so please adjust for your time zone. New York time. The market opens for me at 9:30 to 12 o'clock. It's A. From 12 o'clock, it's 2.5 hours. Okay. Then we have B, 2.5 hours. Again. 12 to 14:30 or 2:30. C is from 14:30 to the end of the day. Yes, I absolutely look for when it starts to break out for me to enter. You don't have to necessarily enter at a limit. Finley, you can go in at market. Use the bar timer, Finley. Okay. At 1300 right here at 1250. Yes, short. 1250. Jim. No, not for the third red bar. I just want 2 consecutive closings, Jim. 2 consecutive closings. Take a look at what the Atlas line did on this day. Just put this to false, true. Prices below the Atlas line, which further confirms what I'm looking at. Every single day, ABC patterns occur, Finley. My exit is going to be at first, Jim. Says here a question, how do you know where to exit properly? Look at the ATR, and you see where it is. When you enter the trade, it's at 2.66, which is 2.5 points. Exact profit target, and then trail a stop after that. Okay? Jim? 2.5 points based on the ATR, the average true range. I use as specific entries, stops, and trade managements than over most other traders, because I want to know exactly what I'm up against and what I'm doing. Okay? So this is on the 2nd. Let's take a look at August 1st here. August 1st is 9:30, 12 o'clock, and 2:30, right? Okay. So now I'm going to ask you, what is our expectations in the A part of the day? A part of the day is always going to give us some action. The ATR starts to get smaller and smaller as B occurs. I'm not looking at this as far as an angle or anything. It just means that the market's starting to consolidate. The range of these bars are just getting smaller as compared to in the A part. What do I say in B? B is almost always going to be confined within the range of A. What do you think happened in B, guys? Did the B part of the day hold within the confinements of A? What do you think? Absolutely, right? Does that mean, or does that tell me, or does that forecast for me that we're going to have a trending day? Nope, not a trending day, because it's doing exactly what it's supposed to do 85% of the time. Price needs to confirm as soon as 12 o'clock comes that it's breaking the range of A. And so now what this means that we're looking for some action in the last part of the day right here. Let's go further into the future. C. Anybody see 2 consecutive closings above or below the range of B to get me to a trade? What do you think? Absolutely, right? Finley, for you, I'm going to send you a personalized autographed recording. FedEx, overnight. How's that? Everybody else, it's priority mail. I'm just kidding. Yeah, so recording will be available. The recording is available. It'll be on the blog tomorrow. My programmer is about to leave. All right, you got it. So give me a reason to go long, right? I mean, I don't want to just think, I hope it goes long, it looks like, could be, maybe. Give me an absolute reason to go long or go short. And so you can see that at 2 consecutive closings above, here we are here, above or below, gives me the proof that I need, and it happened right here. All right? So remember, I want you guys to think about this every single day. And look at currencies. Same deal happens in currencies. Think about this for a second. If we can expect something to occur day in and day out in the B part of the day, which it's just going to whipsaw and flip-flop within the range of A, then we know what to expect. But when B does something other than what it normally does, what does that mean? It means that the market's going to do something other than it usually does. That's my indication. All right? Harold, NASDAQ, DAX, Russell, currencies, crude. Just, you got to be careful though, because some of these markets, they open earlier than the E-mini. So the time stamp won't be 9:30. Currencies open a little bit earlier. But I would still stick to about 9:30 as far as A. Crude opens a little bit earlier as well. Look at overnight sessions. When the Life Exchange opens in England, you're going to have the same exact pattern with the ABC overnight. All right? But the ABC works on the M. What's the M, Harold? Works on the M, question mark. What does that mean? Them. I mean on them. But the ABC works on them. On who, Harold? Oh, and that. Oh, yeah, yeah, absolutely, Harold. The DAX, Russell currencies. Yes. Think it's dynamic, or I should say it's static. Not that it's static. So you look at the Russell, look at the DAX, look at the Euro Stoxx 50. What excellent market to trade, Euro Stoxx 50. Um, Look at those markets. When they open, 2.5 hours later, you have the most um, or the best moves. Go into the B part of the day, you're going to see a slowdown. C part of the day, look for an opportunity if it breaks above or below. Trending days have the same exact thing. GDP a couple days ago, right? Trading the news. You got it, Harold. Yes, 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 yes. It was the long, right? It was a long trade, right? Yeah. Yep. I teach all this stuff, and I go into much more detail on trading price and price action in the mentorship program. I have a lot of testimonials, video testimonials to back up, how traders really learn something different than just look at this moving average and we follow an indicator. And so I try to stay away from anything like that. All right, let's take a look at this here. This is July 31st. What do we have? 9:30, 12:30, 14:30, at the end of the day. What do we have here? A part of the day. What do I expect in B? I expect exactly what B did. Nothing. Whipsaw. Right? Chop chop. This is exactly what I expect. So, I go into the future. Oops. And I look at this as far as this goes. And I say, if C closes outside, I have an option. And so the day ended, and really, 2 consecutive closings were right at 4 o'clock. So I wouldn't even recommend trading this at 4 o'clock. It's over. All right. Yes, Jim, the power price action works on swing trading, stocks, longer term. So if you're looking at 60-minute, 30-minute, not just day trading. So the power price action, I'm not sure, Jim, if you have anything as far as the Atlas line. I know you've been to a couple of my webinars, but the power price action, and with the training, we can go over those longer term swing trades as well in the trading room. All right, you just got to ask me to pull them up. You got it, Heather. All right, guys. I wanted to make today's webinar a combo of power price action with Atlas line and training you and teaching you things. But I unfortunately don't have enough time to go over. It's another hour on the power price action and teaching you how that sets up and things like that. And so I'm going to have another one of these webinars based on the power price action sometime next week. I'll show it to you guys, and sometimes I want to try to do more than my time is allotted, and so at least you guys got to see the Atlas line in action these last couple of days. I have some videos, I have some live trades, I show my actual count on YouTube, which I don't know if it's a good thing or bad thing, but I want to show you guys that I trade with a live account on Atlas line or power price action. So take a look at that. If you have any questions, I'd love to answer them. I'll invite everyone back next week for just power price action, and I'll just keep on doing more videos and show you what the markets do and what they can offer us. You got it, Finley. Any final questions, guys? You got it, Harold. No problem. You're very welcome. Greetings, Francisco. You got it, guys. I'll talk to you next week. Bye-bye now.